Chris MacIntosh. Delighted to have him again here with us, also with some of our community members. And Chris is going to give us his take on the sound and resilient banking system, very much like the safe and effective big pharma system that mandated our medical prowess and safety. Chris, what's on the forefront of your mind? What did you make of the Fed today? I mean, no shock on the 25 basis points. What's your take just on the today news?
On the today news, it's really just an extrapolation or an acceleration of what they've been attempting to do with this whole Great Reset, which is a consolidation of the banking sector and a destruction of the middle class, allowing them to gain ever greater control over assets, resources, including us, because we're simply cattle to them.
Yeah.
So really, I mean, if you look back at just why is it that you're seeing interest rate rises? You've got people arguing about, there's inflation and all this and the other thing. Look, that's complete hogwash. If you really need to actually address inflation, you need to raise your cost of capital to at least the level of inflation.
Yeah.
By doing that, they would completely implode the entire bond market. In fact, they would be imploded well before they even got to that point. So that's not going to happen, A. And B, then you realize that if we realize that, they realize that. So what is it that they're doing then? Why are they even monkeying around, pretending to be fighting inflation when they're not fighting inflation? The answer, in my book, is that what they're doing is good old Hegelian dialectic, right? From 2008, they took rates down to levels that were unsubstantiated, should we say, by market forces. And then in 2020 and 2021, they put the icing on that particular cake. And they took rates even lower. And you had banks in particular loaded up on the safe and effective, which is to say bonds. A lot of the stuff on hold to maturity, which means that they are basically in bed, married, and divorce is a problem and costly. And now, so they had them set up. It was a setup. Yeah. And then they start raising rates. So all of those securities that they've holding, that they've purchased, now are some valuation different to what they purchased, and it's not higher. And then, of course, you have your tier 1, 2, 3 ratios, which banks have to abide by in order to be solvent. These now come under pressure, right? And it doesn't really matter whether the assets held in each of those particular tiers, all of them actually are affected by cost of capital, because most of them are actually bonds of some description, differing in maturities, differing in risk profiles, and so on and so forth, according to their mandates. But every single one of them that was bought post 2008 was a mispriced asset. That's as simple as that. And now they're basically allowing for a repricing, right? So what you're seeing is the inevitable, which is a lot of banks going, finding, issues, shall we say, because they don't have the capital ratios that are required, because they have a couple of issues now. They have to, in order to maintain their ratios, they have to either A, raise equity capital, and you're doing that into a market that's not particularly attractive, right? So it's dilutive. So it's dilutive to shareholders. So they're pretty reticent to doing that. So that's one thing that they can do, is raise equity capital. The other one, of course, is to sell down assets, and then they're selling down assets, which many of which are actually illiquid, especially the hold to maturities, which they can't sell, into a market which is being repriced by the central banks on purpose, I would say. And so they're in a very sticky situation. And of course, those that are not deemed to be, what's the word they use? What's the crazy midget gave the bloody name?
The crazy
systemically risky or systemically important banks.
Too big to fail.
Yeah. Too big to fail banks. Now, so the issue there, of course, is that if you're not a too big to fail bank, i.e., those that are not owned by the Fed, or that the Fed,
our owners,
the shareholders of the Fed,
yeah,
the shareholders of the Fed are all voting to take out their competition. Okay, and so that's taking place, and it's taking place right in front of everybody's eyes. And they're giving you this bullshit narrative that it's about inflation, or that actually the market's strong enough to handle it, and wada. It's all complete narrative spin, and it doesn't, even if that was true, as I mentioned at the beginning, it's not what's taking place, because if that was true, the answer to actually fighting inflation is something other than what they're doing now. So anyways, that's kind of where we're at. It's a precarious time in capital markets, and as a consequence, all asset classes will be affected by this, because this is the banking system. This is the grease that moves the world.
Yeah. So, yeah, no, I 100% concur with most of what you said. In part, it's sometimes listening to myself speak. We've characterized a demand-destroying event, a DDE. It might be my fascination with double Ds generally, but this overall is something that we feel is already part on the way. We were bearish oil, bullish gold. By the way, just to give you an update in case you hadn't had a chance to check the charts, I know you New Zealand side
this morning.
Yep, gold is now up at 2060s, by the way. And we've got PAC West Bancorp. There's some rumors now that that's not going to make it till Monday. So that fellow is sitting at $6.42. Gold sitting at 2,000. It's actually broken upside. And I was just saying to the community, short term, it might even have a rest, and it's not had a rest at all. It's just surged upside on Fed statement at 2049. So, I said never trade it short. It's our macro bull. But you've actually just had a spike to 2067, sitting at 2050. So we're starting to see the move towards the all-time high be virtually imminent on the anti-fiat. The all-time high that we clocked on 2020, August, Monday the 10th. Well, I'm on a weekly chart, so it might have been any day in that week, I suppose. So let's not try to be over precise. But the high, I'm just double checking, 2075. So you're talking about gold being a smidgen from all-time highs. And you're seeing that in an environment, a commodity group where oil is actually trading down. So this smells to me like our double Ds that we love to see with a bit of E. We'll provide the E. But there's a pair of double Ds out there somewhere. Otherwise, they're same commodity categories, aren't they? And we're actually seeing oil trading off. So that tells you consumer has been wrecked. We're seeing Amazon at all-time lows. We did some analysis on Amazon on charts versus in gold, and we showed when was the moon period from 2011 through 19, even divided by gold, where gold is money and we've substituted the dollar. Amazon was a mega outperformer, and it's made its target. It had a set up target against gold, and it's now in a head and shoulder reversal in gold units. So that means you've got one of the members of the FANGs that's now going to underperform, that has 50% of it as an online retail store, 50.4% plus 5 or 6 more percent on a physical store. So it's overly reliant on consumer and is now being defanged as a result. It's no longer a go-go stock, in our opinion. And you're seeing gold dominate on weak oil, when normally they're supposed to go together because it's a dollar thing. What we're actually seeing, in our opinion, is the monetized anti-fiats of gold and potentially Bitcoin. I should check in on the Bitcoin price, how it's faring actually in lieu of all of this as an alternative. It's back up above 29 after visiting 25. So you're looking at the anti-fiats category finding some fizz, whilst everything else that consumers rely on is going down. So do you think we're on the verge of this? They've over-tightened. We are in a recession. I'm pretty sure you agree. We crossed the criteria ages ago. They then created some exclusion clause that had something to do with labor markets on their fake stats. So we're now in this, in this fake reality where every time before there was a recession, now it's not a recession, red hot labor market. I'm looking at the daily shot and they've said biggest reduction ever in job openings. So, I mean, I do feel that our positioning that there's a demand destroying event is actually here. And it's mid-process of happening, and they are tightening into what is already quite a bad recession. It's going to become worse. What's your take on the demand destruction, the inverse polarities, gold, oil, everything?
All of this stuff can be tied back. If you just say, okay, what's the end game that is being worked at? What is it that our globalist masters are attempting to do? They've told us what they're trying to do. This is all Hegelian dialectic stuff, right? You need to consolidate the banking sector. You need to control the various resources. The issue that, and we saw this side of things is just it's a monetary, it's a use of monetary tools in order to achieve that end. And in that monetary game, what we'd seen, and this goes back for the last 2 years, in particular, a little bit before, but certainly in the last 2 years, is central banks, ex-West, buying gold, right? So if a bunch of guys like you and I sitting here in our underpants can figure this out, you can rest assured that other guys in positions of greater power than us have also figured it out. And I'm not saying they're all good guys and bad guys. Frankly, the way that I look at the geopolitical world is that they're all sociopaths. However, many of them have differing interests and have differing outcomes that they want to achieve. Basically, everybody wants power and control. And so that move by central banks to becoming net purchasers of gold in excess of any level that we've seen, I think since the 40s, was indicative of them seeing issues in the market and attempting as best as they can to address it. Now, quite frankly, they would probably have wished to be able to do that with their own particular currencies, which they can manipulate. But they're not in a position of power to do that, right? In other words, everybody wants to have the control, and it's far easier to control something that you can manipulate. It's not as easy to control and manipulate gold. You have to literally go out and buy it. And there's no, right? So as a default, it is now doing what it's always done in history. It's providing the anchor in a storm. So on the geopolitical international banking front, that move, we started seeing that 2 years ago. And certainly you can even see it within currencies. You can take gold against every single currency. It's been in a massive bull market. It's only really the dollar that it's been kind of like, and people tend to, for obvious reasons, focus on the dollar side of things. And I think that misses a lot of the point, because you're kind of only finding out later on in the game, oh shit, there's something going on here.
Yeah.
So, if you imagined a collapse in the banking sector or some variation of a collapse, the liquidity freeze up on that is going to affect every single market. It doesn't matter if you're a flower seller in Florida or if you're trading metals in Shanghai. I mean, even if you look at like the Belt and Road, right? People look at the Belt and Road and they look at the bricks and they go, oh, look, they're all fighting the dollar. And look, all of those contracts are actually, they're still all traded in dollars.
Yeah.
They're still traded, everything's traded in dollars, right? And sure, there's a little bit here and there that's being moved away. And I'm not suggesting that it's not the end of the regime. It's the beginning of the end of the regime. However, getting there is not going to be a smooth, easy process. So I'm not a dollar bear. In fact, I'm the opposite in this environment, because the reality is, where are you going to put short-term liquid capital other than the T-bills and the treasury market?
Well, I'm glad you brought that up. So here's my thinking on what I think happens next, because if we're largely in agreement, which I think we are about what's happening now, there will be in some sectors, the traditional response, which is there's going to become a bid under treasuries, which will also be a bid under the dollar. So assuming they're causing the fear and the collapse through their own tightening on credit overextension that they created in the first instance, but let's just stick with the present. If they create a bit of a bid, that bid is going to be taken by a lot of central bankers that are looking to dump treasuries. So this time, the fear trade that drives the bond market into that, that always that counter excellent, buy bonds, the kind of thing Raoul Powell mentions all the time, wear diamonds type thing, that you're actually going to get much lesser of a rally because we turned the cycle for debt, in our opinion. The events of March 2020 was the final blow. And we're never going back down to those low rates again. So the central banks of the rest of the world will actually distribute for treasuries during this period on the view that they'd still rather have the gold, especially if gold gets paper price slammed a little bit. And then we're going to see the bid coming back. The gold is going to get much lesser slammed than usual, potentially even silver lesser slammed, which usually gets properly monkey slammed. And the monetized assets are now getting more respect, and there's leakage out of the usual traditional safe haven, which is bond and dollar. So whilst the dollar will strengthen a little bit, we're going to get more respect put on the precious metals, I think, first and foremost, because that's central banks and that's bigger money. It takes bigger money to move a 10 trillion market than it does Bitcoin or 1 trillion, for example, but still. But you're also going to see the Bitcoin gets a little bit of speculative capital as well. And we're going to get much bigger leakages, and the treasuries are going to get a rally, but not as much as they might have been expected to in previous eras. So we're going to start to see the thin edge of that wedge, and the people saying, well, we're not ready to go back into that old game either. What do you think about that? And then eventually, when we have crisis and contagion, the full problem reaction solution that will be debt, global Forex currencies, particularly emerging currencies, we will go into absolute potential for dollar spike. Yes, because everybody owes dollars and doesn't have them, on the Triffin's dilemma. But that stage is still to come. I think we're going to get this collapse first, aren't we? Or do you think the dollar spike is going to coincide?
It's when I try and look at these things, we're looking at the financial side. We have other exogenous events that could at any point in time take place that tie into it. For example, we know that the neocons absolutely want war. They have to have a war, right? They're literally trying to take Russia into World War III. Yes. That might not succeed. But you know what? Maybe Iran becomes a problem. Maybe Saudi becomes a problem. Who knows? And maybe they utilize Israel as the proxy tool. Well, I say use Israel. Israel's the driver. But the point is, we could have an event very easily of a geopolitical nature that would, at that point, I think, drive a lot of capital into short-term US paper, just for the reason that it's very liquid. It's hate to use the word safe, but it is safe with respect to a short time frame. In fact, we've seen this over the last few years. The capital that's going into the US is going into short term. That's why you got an inversion, right? Nobody's buying. Nobody wants 30 years. Nobody wants 10 years.
No,
basically, and it's like clients have said to me, what do I do with
protection? It's tactical, no longer strategic.
And you're making that decision knowing that it's a loss, right? You know that your inflation rate is running above the cost that you're achieving on your 3 months rolling T-bill or
it's
whatever.
It's a grudge investment, which is tactical and short-term of nature, but purely defensive.
But it's happening at scale, right? So it's not just a bunch of guys with a few bob like you and I looking at this stuff. It's at significant scale now. So we know that the long term, the longevity of that bond market, as you referenced, is done. Like, we're finished. Right now, it's just a matter of how it plays out. But I think in the short term, that those short-term notes, the liquidity that is provided, and the fact that the United States, at least geographically, is safe, or at least is perceived to be safe, and it doesn't matter whether it's safe or not. If the market perceives it to be safe, you're going to have the capital moving accordingly.
Yeah.
So, and if we look at the alternatives that are in place for individuals or institutions with significant amounts of capital, Europe is just a massive, massive problem, right? Putting your money into any short-term securities in the euro or in the eurozone looks increasingly unattractive.
Yeah.
Okay. As well as the fact that it is geographically more located towards or closer to a wall.
Yeah.
Okay. So what are your alternatives, right? China's got a closed capital market. China's not actually, people go, oh, I think put in China. No, forget about it. Until they open their capital account, it's not really going to play. And that's why you don't see much trade in yuan, outside of government contracts and stuff. So that's an issue. It's not that. Sure, you're going to have capital going into places like Singapore. Hong Kong is just China, so it's no longer what it used to be. The Middle East is a beneficiary, the United Arab Emirates. But in terms of global scale, it's just basically the US, and it's the US short-term paper. And so but again, that's short-term in a demand-destroying event, as you mentioned many times, and my hat off to you for calling that and nailing it. That is the answer. Okay, but also that's sort of in the I wouldn't say domestic, but in like a closed system within the currency world, that's the option. Gold is the option outside of it. And it's one increasingly, interestingly, that is not being taken by retail. Retail participation in this whole thing has been subdued, which I like. I love the fact that institutions and all the gold bugs are like, whereas for years they were just like jumping at everything and anything. So the market setup for precious metals in particular is extraordinarily attractive.
Agree. I concur. I'm seeing it technically every which way I look. And the one thing that lots of people fascinate about, Chris, and that is that the general indices broadly down in the demand-destroying event, but a lot of rotation within that, because you could have gold miners and you could have a strong gold. And you could have, yeah, the military-industrial complex seem to be, there's no limits to the largesse, especially as I consider this, the pub's going to burn down. So everybody's just putting lots of drinks on the tab. And the statists are putting the statist money with the dark state entities, because it's sort of, it's all going to get written off anyway. You're not going to have to pay it back. It almost feels like that way. Everyone's maxing credit cards out because they're leaving the country. It's got that sort of whiff about it. What do you see for equities? Surely we do, even in a general sense, which will have a lot of winners and losers and mediocrity in there. Broadly, particularly in the tactical, the demand-destroying event, if there's going to become some bid under bonds short-term, and it's going to be the grudge investment for short-term haven, knowing you're losing, but you're losing less in a demand destruction event. Surely equities go down broadly because we're seeing a lot of short setups, specifically in energies, but generally.
Yeah, look, I mean, Francis, you know me, and I know you're very good at this short-term stuff. And the way that I tend to look at these things is I look at the probabilities on the short term, and then I step back and I look out and I say the bulk of what I do in terms of how we manage money needs to be based on a 5-year-ish time frame. We're going through what is such a phenomenal not just a once in a lifetime, once in a 100-year time frame type of, it's a long-term cycle thing. The risk of getting that wrong far exceeds me getting something right or wrong on a 12, 24 month basis. Okay. So just so people understand contextually how I think about it. On that front, I think it's entirely possible we have some liquidity driven event that is the Hegelian dialectic. It is designed to essentially wipe out many participants, such that the BlackRocks of the world can come in and scoop up the assets, such that they can justify a repudiation of debt in some shape or form and an introduction of central bank digital currencies and something of that nature. However, coming out of that, and it's not clear that that's going to be an easy process or one that's linear or one that is successful. And I say it's not necessarily successful because having previously run a venture capital firm and having invested in, lots of tech-based types of firms, I can tell you that having a technology and implementing that technology and running it are all very complicated issues. These monkeys, firstly, private businesses run by extraordinarily talented, driven people don't manage to just pull it off. So the idea that the people who can't manage to deliver your post are going to manage to do it is it's just not going to happen. So, but that doesn't mean that they're not going to push it and attempt to do it. In that attempt, it's going to be incredibly chaotic, very disruptive, because civil unrest, all sorts of shit. But out of that chaos will come solutions to it. In that time frame, I don't want to be anywhere invested into something that's basically tied into that digital infrastructure. I want to be in gold. I want to be in hard assets, because ultimately the only way, and it's a financial war now. It's gone kinetic in parts of the world. It's likely to go kinetic external to that for multiple reasons. In that environment, you want to be owning hard assets. You also want to be owning energy, because you cannot have any political security without energy security, which is why Europe is fucked. And so there, I think that side of things presents extraordinary convexity, right? And so that's how, but again, short term, I can see, look, any business, if you could be exceptionally good at what you do, have no debt, have tons of cash in the bank, a whole range of things. If a lot of this, if your bank accounts freeze up, or anything over 250 grand disappears, you can't make payroll, like you have a lot of issues. There is increasing probability that we have something of that nature taking place. So it becomes tactical for me to de-risk within my portfolio based on particular equities and their ability to hopefully navigate what could be a very difficult time frame. So I don't want companies with a lot of debt. That's never been the case. We're deep value investors, but it becomes even more important in this sort of time frame. I want to have guys that...
Debt is literally the controlled demolition tool of these twin towers, isn't it? I mean, it is literally a nanothermite, isn't it?
Just jumping across to our barbecuing friends in Australia, the RBA just took up rates, 25 bips.
Yeah.
And you've got what is one of the most leveraged real estate markets in the world. That's done nothing but go up for, for 20 years.
Yeah.
Yeah. And, I've got friends and a lot of family, or some family and a lot of friends and stuff over there, staff, you name it. So I'm pretty well in tune with what's going on there. And I tell you what, this is going to be an absolute killer to the real estate market. And that is, aside from the shit they dig out of the ground and send to China, the only thing that keeps that place going. And now the stuff that they're digging out of the ground, sending to China, they're actually putting a massive handbrake on it while antagonizing China at the very...
That's unbelievable to me. Literally Australia, that's your neighborhood big brother. And they voted with the Western Zio axis. And I just think, of all nations, that is double stupid. I mean, you get dumber, and then you get
that's that.
And it is and it also shows no foresight as to how the things are rebalancing in any way, and even just fence it. Politicians are brilliant at talking and saying nothing. Go a little bit of this, little bit of that, and yada yada, fish paste. Keep your oars in with both sides and don't do too much. I mean, there's so many things they could have done, and they've just gone in so aggressively in rhetoric and everything. It's unparalleled. It's literally, here's my biggest buyer, my stuff. How do I piss him properly off to destroy business Australia? And it's still unparalleled. And then internally, as you say, they didn't really breathe very hard on the 2008-9 recession on their property, because China became the spender of last resort during 2008 and 2016 till the Shanghai Accord. And that meant they got
stuff that was challenging them.
Yeah, they got a whole.
And now they're destroying that. They're both destroying it on a domestic policy basis, and then they're destroying it on an international alliance, trade alliance basis. And they're doing it at the behest of the hegemon. Now, we look at this and we go, that's completely nuts. But consider what Europe has just done in the last 10 years. Yeah. It's exactly the same thing. It's
an antagonization of rupture. But you at least get the feeling that Europe would be like, oh, God, America, please don't push us to do this. Do we have to go in here? Can't we just, muddle on a little bit? You don't get that same sense of zeal and dumb fuckery enthusiasm. Australia is literally doubling down and ordering, a triple Dagwood of shit sandwich and give me a slice of horse manure with that and let me gobble it all down with relish. Europe is doing pretty much the same thing, but in a more lame-ass way.
Which kind of makes sense, because Europe is essentially just a bunch of tribes.
Yeah.
And it has been for hundreds of years, which is why another reason why it's going to fragment and splinter up. And the very idea that the EU will continue to be as one or even expand, I think flies in the face of both history and current events. But Australia is different in that respect, right? So it's not got that fragmentation. It is a one-party state. There are two parties, but they are two cheeks of the same ass. There is no difference between them. And so it's that particularly that political entity is completely controlled. It is completely controlled, and they're proceeding down the path that they're going to proceed around without any remorse or without any consideration. That seems to me to be clear. As much as we look at it and we say, that makes no sense, it is what's happening. So you just have to act accordingly. But what is interesting is that what you're doing there is you're taking supply out of the equation. You're taking out agricultural supply, you're taking out commodities, energy, a whole bunch of things from what will be a bifurcated global system, right? There's going to be you're either with us, what was George Bush's thing? You're either with us or you're against us, which has been utilized by dictators and sociopaths for hundreds of years. And it always manages.
The binary solution, light on, light off. So given that that's the trajectory for Australia and Europe, as we discussed, what are the winning wealth building trades outside of metals long? Maybe some miners in due time, but I think at the moment they've felt the pinch of the cost. So miners are lagging, A, because they forward sell production, many of them, not all of them, and not 100%, and B, their costs have escalated. That actually, when I did a recent interview, and the cost price of pulling stuff out the ground is literally coming up under where all our metals priced. There's very little supernormal profits in any of it, because most of the appreciation is just keeping marginally ahead of actual cost price. So when do the miners roll? How do you see that going? And is there other sectors that you would favor? I mean, when we last spoke to you, I think we had a concern around diesel and energy. Now, macro, let me be clear. I'm a bull, all commodities things. I'm just thinking that the DDE takes everything down first. That's when you load up on your oil stocks and your oil plates.
Yeah, but that's a good time for you to start considering where that convexity is going to lie, right? So you can take existing scenario and say, okay, what does that look like now? And then what does it look like in a DDE? And because here's the issue. because, as a portfolio manager, and just having lived this life for 20 plus years, when I go back to like when I was 20 something, right, you would have events take place and you would knee jerk your way out of it. You go, oh, that's like, what is that? And you'd quickly try and figure out what it was. And then you go, oh, what benefits? What doesn't benefit? No. That's not the way to do it. You need to think long and hard, well beforehand. And the kernels of opportunity, you need to know the probability of what they looked like way back, right? So we start looking at a lot of sectors which we have no intention of buying. None. Right now, okay? You could look at banking, right? We've seen, that's how we started this conversation, right? Was talking about banking, right? That's a time to start thinking about the long side. But I might only take that trade in 5-10 years' time. But you know what? I need to be having a very concise idea of what the structure of that market has looked like, has gone through, such that when the time comes to buy it, when absolutely nobody wants to touch the damn shit and it is printing money, is when I go, okay, it's sitting there. It might go down, but you know what? Probability-wise, I can now take a 5% weighting, 10% weighting, whatever it is, with a probability event over a 5-year time frame that is far exceeds anything else that I see. So that's basically how I conceptually look at these things. In that context, we've looked, and you've made reference to the oil price and things like that. The oil market, if we go through, there's like some sectors within it. There's onshore, offshore, there's service vessels, there's a whole lot of stuff. If we look at like drill ships, this is an area that's got decimated, absolutely bludgeoned to death. And then 2020 just put in another nail on top of what was already a very well sealed coffin for many of the businesses. You've had restructuring, debt reorgs. I mean, and the number of companies within that space has shrunk massively. The other thing with the drill rigs, a lot of these guys basically bankrupted a lot of the builders. So if you want to go and get something built now, the
barriers to entry, yeah.
There's barriers to entry. Aside from the fact that the guys are going, you fucking bankrupted us last time. We don't want, like, we want 60% down. We want, so the terms for bringing on additional supply are very, very difficult. And at the same time, like right now, we're running about 90% utilization. You can never have 100% utilization in the space because there's always stuff that's in dry dock, it's getting repairs and maintenance and da-da-da-da-da-da.
Oh, yeah.
So, and these things are spitting money. And they basically don't have debt because they went through reorgs over the course of the last bear market. So you structurally have a market which is low in debt, spitting money, and there is no ability or very little ability to bring on additional supply. That's a market to me that's very attractive.
Yeah.
And look, I don't actually even think necessarily these things are it's a bit like coal companies.
Yeah.
Because there's a huge amount of reticence from any shareholders to actually going out and taking risk, i.e. going maybe developing more fields or bringing on another coal mine or fighting the greenies to bring on whatever. There's a huge reticence to doing that. So the companies are just paying back shareholders. They're just paying back shareholders. So you're running sometimes double-digit yields on this stuff. You're buying it at 3 times PEs. So I think it can trade to 5, right? Doesn't have to trade to 15, but it's going to be like tobacco stocks. And you go and look at tobacco stocks for the last 20 years and you compounded all the dividends, you fucking killed it. So there's markets like that, which I think look very, very attractive.
And that doesn't engineer in a $250 oil price after they've crashed this thing. That they do the next time. And the dollar and all fiats lose immense amount of value, even the dollar. And yes, there's a shortage, and you're caught short. So then they turn into turbocharged mega cash fillers, don't they?
Yep. So it's one of those things where, and I'm excited about it because it's very difficult to get anybody interested in it. That's almost always a wonderful sign, right?
The Rick rule. They've got to all hate it.
They're all hated, and look, these are very capital intensive businesses. You want to go and put a new rig as $1 billion, right? So that's never equity financed, right? It's debt financed stuff. But now you've got companies that have almost no debt. How do you get there? I'll tell you how you get there. Reorgs. Yeah. All your fucking equity holders who got wiped out, your debt holders got, equity holders got wiped out. They're now sitting as debt holders. Yeah. Equity holders lost their shares. And it's
so. Give us one equity. Shout a name out, like a favorite that you would say. Offshore drilling game.
Transocean.
A little
bit of debt. Rig's the ticker.
Switzerland, NYSE, Transocean, Rig, RIG.
Yeah.
And this is a balance sheet assessment. It had a beautiful collapse to 67 cents, obviously March 2020. Yet it's been as high on a log scale chart. So let me just share the screen for everybody to participate in this, just so everyone can see the story. Share screen, and we'll go for Rig. Or I better go entire screen, actually. Otherwise, if I draw, you won't see it. So let's do that. This is a monthly chart of the suggestion Chris has mentioned, and it's log scaled. So just so that everyone gets it clear, that's what a collapse looks like, with lots of reorgs or cap in the normal sense. And it's well below even its listing error that was in and around, I'm assuming, $10. It's at 565. That's how it looks. And then this is what's happened when you look at it on a log scale. And this, of course, was the precursor. This was such an ominous, beautiful technical short. That was the 4T. So ironically, this all coincided with Russia-Ukraine war, the first time round, by the way. And then it never happened.
Yeah.
Then we had the major collapse in oil. And I wonder if the control structure themselves had positioned for what's happening now back then. And then they said they're not ready. They're not ready. They put it on ice because this was such a setup. Look at that.
Yeah, 2020. Yeah.
And then you get it again in 2020 with the events of March.
You see how quickly it bounced back up out of that 2020.
Yeah.
And this is true the entire market. Because, I mean, look, go back to 2014. This was basically the tail end of that energy bull, right?
Yeah.
I mean, you kind of knew 2012, you knew you were done.
Well, the subprime, they skimmed off all our newfound wealth. This was the end of the Goldilocks Greenspan era, which had Bernanke lead us into the property boom. I think it was already Bernanke by 2008. And we had peak house property as ATM for most people over the world. And that was peak oil. They were skimming off our largesse by the biggest tax, the thing we use in everything. And then the consumer, the best days, the Goldilocks era was over. And then we had the multitude of crisis industrial complex that they've now established and funded with the farmer access. And here we are now. So this is a great one. Technically, I'd say it doesn't look 100% ready yet. I still see this rising wedge. It could fall in for my DDE for a dip down before it goes, because it's reached a couple of significant technical levels now, which it made on the way down. But I can see everything you've fundamentally described as potentially coming true. That's an interesting one. Any others that
you could look at coal as well. Because look, I won't waste you guys' time. You can go and pull up a whole bunch of
that's Black Diamond Resources or coal commodity.
Peabody or BTU is a ticker.
Peabody Energy Corp. Yep, let's pull him up. I'm sure they have a very chart. It's actually balanced much better. Is this a recent listing? I've heard of Peabody before. Why is it showing me?
Okay. Try Arch.
Let's have some history.
Yeah.
Arch Resources.
Oh,
Yeah. Also, not too old, 2016, but this again is log scale. So just everybody to realize it's throwing it down right now. And this again ties in with my feeling that it's right now we're first going to get the down leg. But I could see you wanting to get your hands on this. Tell us the story on it.
oh, look, I mean, you got this one's not paying out at that high divvy, but across the board, a lot of them are, and we'll often buy companies that will in anticipation of dividends as well, which is I think what's going to land up happening with companies like Arch. So I mean, what's the forward PE on this? It's under 4. I think it's like 3.5, something like that. So anytime you're buying a company with at that sort of valuation, you've got just much lower risk. We've already determined that debt's a huge issue. Coal is going to continue to be the underpinning to crises. If you look at what's happening in Europe, for example,
the futures. So that's coal, the product, not the equity.
Yeah, coal, the product. But look, you could pull up. I mean, it doesn't mean it could be Arch, Peabody, Whitehaven. There's a whole bunch of them. Anyway, and it still accounts for the vast majority of electrification supply globally. China's building hundreds of bloody coal-fired power stations. India's doing the same. Russia's doing the same. So on the demand side, this stuff's not going away. It's just that simple. And then, of course, what's been happening, and this has now been happening in Europe, is that they are importing nanny from Europe, from the US at 4 times the price. And guess what else they're importing now? Gold.
Yeah.
Because partly they don't have the facilities to take in the LNG to the extent that they need to. They've shut down their own, like Germany just shut down their last nuclear. And nuclear is the answer, but the problem with nuclear is that it's a long time if you're going to start building a reactor and getting it into production, you're looking at a 10-year time frame at least. And so it's not a solution now. And so the default is going to be, hey, we need to keep the lights on. And sure, there's still going to be demand destruction.
I'm finding it hard that the people in power's solution isn't entire reduction in demand via reduction of population as the first alternative, rather than building new nuclear plants.
Well, you can get there by multiple ways, right? I mean,
yeah, it does feel like they're using many different methods, and reducing that demand is
poverty's one of them. Poverty's one of them, right? Because with poverty you have much higher mortality rates. That's without people being
much
safe.
less expenditure and demand for energy.
Hey, sorry.
Much less expenditure and demand for energy as well.
Exactly.
Put us all in huts in the jungle or in an urban pods. You can have
15-minute city zone. Yeah.
You can have lights out at 9 o'clock and switched on at 8, and you have 5 minutes to boil your egg. And then, funny enough, in RSA, I'm not sure if you're aware of this, Eskom have talking about the smart meters and being able to turn people's stoves off remotely once the utility. So you wonder where this war on the gas stove has come from. It's a war on independence. And not being in the smart grid and having remote power, being able to turn your gear on and off if they think you're overutilizing at the wrong time.
It makes me think, and I haven't done enough research on this, yet those mini nuclear pods, then they can power like an entire neighborhood, one of those for like a lifetime. And they're fairly inexpensive.
Let's get into the nuclear business, Chris.
Well,
let's go nuclear.
It is the solution. Imagine you could take a device which can power an entire neighborhood for our lifetimes, independent of anybody independent of anybody, that we don't have to ask permission. We don't have to beg and plead. Then we want to cook a second egg. You know,
Please, sir, can I boil my second egg?
yeah, like Oliver Twist. Can I have some more?
Only if it's your own testicles, brat. Sit down. Yeah. Okay.
But no, look, this is just going to bring about, and look, we're talking about supply and demand of particular commodities within their sector. The other component, of course, behind this is the whole monetary scheme, right? So when a monetary system implodes, and I saw this when, growing up just, down the road from you, and you looked at what happened in Zimbabwe, and I traveled up there, and then I went back there in 2008 to go and have a look at opportunity when the place was imploding. And it's interesting, the dynamics of how people operated in that system. And so when the currency is collapsing, there was an alternative. It was the US dollar and the South African rand to a lesser extent. But, we're moving into a phase where there is no alternative on the currency side of things.
Big thing, isn't it?
And that makes it both terrifying and extraordinarily interesting in a good way, because the fiat system is shit. We need to get rid of it anyways. But getting to some other system is going to be extraordinarily painful. But ultimately, what you see, and I remember a quick story. I remember meeting this dude in Bulawayo. He used to have an electrical business, pretty successful. He had branches in Harare and all over the place, and then things just started collapsing, and mostly with the inflation rate running at, God, I can't even remember how many millions of percentage it was. You know what he did? He just bought fridges. He bought fridges because he understood that was his business, and he understood he could store these things. So he had a warehouse, and he just literally went and he kept buying fridges and stored fridges, and that was his collateral and his capital. And he was doing trades where he had now got into, what was he doing? He had a deal with a trucking company. That it was a buddy of his who owned this trucking company, and he had bought in as a shareholder and stuff. And basically, the collateral for his shareholding was fridges.
Yeah.
And so, and really, what they've told me was that ultimately you want utility value, right?
Utility. Yeah. And especially in a hot climate where people go on something that's desperately needed, food and retaining food.
Well, the interesting thing with the fridges, if you think about consumption of food, like let's say you slaughter an animal, you go, wait, cool, there's, I don't know, a year's worth supply of meat. Well, it's only a year's worth supply of meat if you can put it in a fridge or in a freezer, right? Yeah. So without the freezer, that value of that cattle is some other value, right? Let's say it's $1,000 for
3 days meals versus a year's worth.
We just had a beast slaughtered, I think. They're probably about like $800. Okay, make it $1,000, whatever, right? So $1,000, but you're going to store it in the freezer. So cool. What is it worth when you don't have a freezer? It's worth about a week's supply of food.
Yeah.
And then then you've got to sell it off, right? And that takes time. It takes, and no one else can store it. So it's utility value. Utility value becomes everything. And it's time to start thinking about things in that fashion and saying, okay, what in the world has utility value? What are the equities? Yeah. What do those companies look like? Where are they run by? What do their debt levels look like? Where are they operating? Are they operating in some zone that's becoming a 15-minute bloody city? Or, so these are all, they're complex and they're difficult, but we have to make these judgments.
And the utility to be able to solar power those freezers and fridges as well. You need the whole supply chain. You need the whole supply chain. You need to be either solar or your own little nuclear plant, and you need to be the freezer guy, because then you could almost rent space in the damn things. It's worth it for people in terms of utility.
100%. 100%. Look, I mean, I've got sort of doing some stuff on the side like that, where you've got like a buddy of mine in Costa Rica, big farming operation, and you're basically creating synthetic contracts with suppliers of different resources within the farming chain that are all independent of one another. But it's almost like old-fashioned trading, and it's all things that have utility value that you absolutely need to have, and you get the scale from larger operations. And you, like, for me, I'm not a farmer's backside, right? So I can utilize my capital and my intellect to actually put together contracts and form resilient type of network. And it's really what, if you think about a portfolio, that's what your portfolio should be. It should be a resilient network where one thing hedges against another, and so on and so forth. So, and look, these are the times that we really have to be addressing this. You go back to when I started in the business, when you started in the business, you didn't have to worry about this shit. You could just, so.
It's fascinating. I mean, you could, virtually, you could secure your food chain on solar powered deep freezers that you just keep stocking, and you just put berries and blueberries and various other things. People can make smoothies, and you just choose one line of food, and you can sell them by freezer full. A year's worth of vitamins, a year's worth of health, a year's worth of whatever. They can come and collect the entire storage unit, or they can leave them there with you. I mean, and you can barter that for meats and everything else. You need to specialize in being able to provide. This is very prepper-esque. It's not particularly financial of us, but we have strayed into this area.
But I think the conversation's useful in that.
Oh, definitely.
The way that I manage client portfolios, my portfolio, is with the same mindset. When I look at the structure of sectors that I buy, the companies, where they're located, the geopolitics surrounding them, all of that sort of stuff, what you're essentially doing is building the same sort of network. Now, going and doing it on a physical basis yourself, I think makes a whole lot of sense. But like, why would I live my life along two different lines? Like, if this needs doing, it needs doing at my individual level. It needs to be doing in my portfolio as well. So I don't make a distinction between the two.
Yeah. But how do you equity invest for that? How do you, or do you do it at localized private contract level? In other words, there is no equity.
No, I mean,
agreements and the relationships.
Very, very good question. So the way that I think about the difference between the two, where I'm doing something at the local level, is something that I got control over, right? It's somebody up the road. It's and it's when I'm doing it in a portfolio, it's an international geopolitical level, right? So, for example, and I was just on the phone with a buddy of mine who's one of the top bankers of I won't say the name, big bank in South Africa that runs most of the banking throughout Africa. And they're putting together energy contracts, commodity contracts, all this kind of stuff throughout Africa. All of that stuff is literally going to China on typically anywhere from a 50, often 80% offtake for 20 years, 20 years being the minimum.
So explain what that means. So someone, a major banker, is putting together a contract to make supply provisions to various African states or communities in states, and China is providing what? Are they providing the actual good or item?
Sometimes they're providing more than capital, but typically, if at least through the banks, it's a capital trade, right? Then behind the capital, there could be contracts whereby there's Chinese labor supply to build XYZ or whatever the case might be. A lot of that is just not noise, but it's tangential to the ultimate contract which is put in place, which affords the participants in that contract the same outcomes. So that contract is basically, I'll give you money and I will get 80% of the offtake, right? So think about a loan. Like, instead of me loaning $1 million and getting 5% back on my T-bill, okay, I'll loan the $1 million and I will get 80% of the supply of a copper mine or a coal mine.
So this is like royalty business on gold mines, but it's the dominant consumer instead of just a minority consumer. Most royalties in gold mines, 5, 10, 15% is probably very high, where gold mines commit for capital to certain amounts of the production. This is taking the gold royalty business to the next level and actually saying, you're getting to keep enough for yourself and a few hundred other people, but I'm the lion. It's just a shareholding differential, really. So it's a supply chain. It sounds like the economic hitman to me, in reverse, as by the Chinese.
They took the textbook and they're just perfecting it. Okay.
Yeah.
Now, so you can argue about whether it's right or wrong. Like, again, come back to what I said at the start. The way I view all these people is they're governments the world over, and the particular type of individual that is attracted to government is typically a sociopath. None of them are our friends. However, they have differing vested interests, and they will act accordingly. It is our job to understand what that is, and then to navigate it and invest to profit from it. So what I'm saying is that when I build a portfolio, I'm looking at those factors, and I'm saying, okay, what are the incentives? Who's doing what and why? I want to participate in that because I need that level of security for me too, right? So when I'm investing in particular companies, who are they contracting with? What do the deals look like? Who's the ultimate beneficiary, et cetera, et cetera? That stuff I pay attention to. And so from an individual basis, I'm not necessarily securing my own eggs down the road or my own energy from a nuclear sub or whatever it is, right? But in my portfolio, it is being structured along the same basis on typically a geopolitical, international, way of looking at it.
Yeah. Oh, it's interesting. It's interesting on a prepper scale for those that are thinking about, the personal prepping side. If I would still say I feel deeply under prepped, despite holding, plenty bullion, plenty, ability to protect myself in terms of securing, because I'm doing the nomadic thing. The two are kind of contrary. If you're in only certain place for a short time and you're moving around while you're maximizing your benefits, you aren't getting scale on the local front. You really have to use your time 3 times better.
So that's when my solution to that, Francis, is basically so there's something. This is a lesson that I know we've only got a short time, but I went to Zimbabwe to go and have a look in the crisis. And what myself and a bunch of buddies thought was going to be the way to do it was to go in. We were looking at gold mines. We were like, cool, we can pick up some of these gold mines, hopefully for nothing, and, see what happens. Anyway, long story short, that was not the way to do it, partly because of the laws that were in place, which meant that as a white person, taking ownership of those sorts of assets was extraordinarily dangerous. It was likely that you would go have them seized from you. And so the best way to actually do it was something that they have, which are called tributes, right? So you can get a tribute on a particular property and on the resource, which is basically like a supply contract, right? And that's how I've looked at what you're discussing now, which is, how do you as a nomadic individual go around and still secure supply of the goods and services that you need. And the way that I look at it is you would go, let's say, I don't know where you are now, if Panama.
Panama. I don't mind saying Panama, yeah.
Cool. All right. So you say,
Costa Rica's just down the road. I can go steal your contracts and eat all your berries.
You should come visit, come stay. So you go to like a local farmer. You could have a loan contract with them for supply for 10 years. Why not?
Yeah.
There's your off-take for 10 years, right?
Yeah.
Or maybe he's an egg farmer, right? And then you can go and you can do the same thing with multiple other participants, depending on what it is that you're trying to secure, right? So you don't have to be the farmer, but you get a long-term contract, which allows you that level of control over your individual resources that you need. And you do it now, it's basically also an inflation protection, right?
Yeah.
Because what's the cost of those goods now? What's it going to look like over 5, 10, 15 years or whatever it is? What do we have if we have a debt collapse? Now, if you have some sort of liquidity event, you could argue and say, well, yeah, cash got more valuable than the eggs. Well, if that's a game you want to play, then I'm suggesting that you're probably actually too short-term in thinking. So that's just quite a simple way that most people can go about structuring a form of resilience that they don't currently have. Because the fact is, like, even if you sat down now and said, I'm going to be a prepper, what does that mean? Okay, you're going to start farming. You're going to need to get engineering skills.
Much to do, yeah. And we're all pencil necks, and we got 5 thumbs for hands and all of that. A lot to learn. I still say you should take that journey anyway to learn some stuff. But like you say, it's much better to contract it out to the whole concept of specialization established in manufacturing and the Industrial Revolution still holds. So, yeah, rather do contracts. Makes sense.
Mm. Yep.
Well, how do you deal with the fact of currency and payment? Because essentially you could have, you could lock in a price that's beneficial to you today that becomes ever more beneficial as you're giving rubbishing fiat on a depreciating, that you get something where the farmer doesn't want to provide it to you. At one point you were giving him security, and then now you're ripping his face off, and that it remains contractually enforceable. You want it to be good, but not too good. In other words, you want your party to survive.
Yeah. So it makes it a little bit more difficult, and there's an element there of individual business analysis. But instead of having a supply where you're paying almost like a subscription service, instead of that, I'm suggesting you could go and you could make an equity investment or a debt investment into a particular. Let's just hypothetically take some dude who's got chicken farm. Okay, he's got a bunch of chickens running around, and he's got sufficient demand. Maybe he's only supplying to, let's just say for shits and giggles, 15-kilometer radius.
Yeah, okay.
No, say like 15, whatever. Farmers market, whatever. Right? But there's an extension that could be, there's demand, there's an extension that could be made of that business, but it's going to require capital. Maybe it's 50 grand, I don't know. But, so now you can make an equity investment, contractualize that such that you can take that business to be able to do that, and within that contract secure supply as an addition. So you basically now you're an equity holder in a business, doesn't be a listed business, but you've got a vested interest in the outcomes of that business, and the participant, or the business or the farmer or whatever it is. I'm just using a farmer's example. It could be a business, but yeah. So in that instance, what you're doing is you're just deploying capital up front, securing something. And so then there's not, you can't come 5 years down the track and go, well, like the contract that we signed was for, I don't know, $50 a month, and now $50 a month doesn't buy me shit, and it's not working for me, right? Which would be a valid thing to take place. You don't have that issue. Because the $50 a month was capitalized at the front end, and you've gone and you've, built some more chicken sheds or whatever the case is with it. So your production has gone from, I don't know, 200 eggs a day to 400 eggs a day or something.
Yeah. I think the equity investments are not a bad idea. I mean, especially with a boilery. I mean, if you've got chicken breasts and eggs, it's pretty powerful foods. And you get someone on the agri side, and this is why I've actually also felt drawn to South Africa, because there's a farmer everywhere, and there's quite a few very good farmers who are battling. They might need to make security, additional security, etc. Arrangements, and might need a bit of extra cash, and you need to make sure that they don't go under and that they're well run. But some of them are well run and just want to retire.
It's no different to any other equity investment you're going to make, is it?
Yeah.
Like is this business going to go under? Who's it run by? What's it been look like? Have they run it well for the last 10 years or whatever the case might be? Have they got good contracts? Do their clients like them? Do they screw people? All those things that you would do ordinarily, you're going to do. You're just going to do it on a much smaller scale, on an individual basis, and you can build yourself security.
Yeah. No, very, 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 very valuable. It brings that old joke, does a dad own a brewery, as a future wife joke quote, to a whole new level of relevance. I would say, never mind the beer. We're getting even more back to basics. If there's something, to some people, the beer is the ultimate basic. But yeah, it's fascinating thought and discussion. I wanted to give the community an opportunity to let me know if they had any questions. So I'm going to give them a chance just to respond. But going back to locales, Chris, you're in New Zealand. You have some interest in Costa Rica, clearly. Where, when they stop the music, I have a feeling the airlines are going to get topped out, largely, most of them, except sort of business class, exclusive, small niched, and then private flights. If the music stops on freedom of movement, which clearly the 15-minute cities and all their Bolshevik prison yard mentality is indicating, do you still have a geographic preference? I mean, this could happen while you're in New Zealand. What would be the downsides of it happening in New Zealand, for example? What would you miss? Are there places?
Yeah, I've got a pretty robust setup here. The issue with New Zealand is that it is fairly likely that it becomes a proxy for the hegemon to go at China.
Yeah, like Australia. That's what I was going to say. The criticism we were making.
New Zealand is just it's another province of Australia, basically. So at least on the political front. And so both Australia and New Zealand are extraordinarily problematic from that perspective. It's hard to consider what we've talked about here with some, music stopping. It's hard to consider that taking place without it erupting in an international war as well as massive domestic civil unrest. Right. So then you ask yourself the question: where would you want to be in a place with that sort of civil unrest? Who has and what sort of society have got the ability to navigate that better than others? I would suggest it's places that have got an ineffectual government. They're smaller. The people in general often are not spoiled brats. So there's a hardiness, there is a resilience that exists in the populace that can deal with hardship, and they've been doing it for some time. And then geographically, they're situated outside of the hot zones. And I would suggest the hot zones are basically North America, Europe, and then if we have a conflict between where they try and bring China into things, then the Five Eyes will get pulled into that particular clusterfuck. And so that rules out.
Which is why I say don't be in that one. And they are the high that can go down. Most of the journey is down. And I keep saying a couple of one, Raphael's mentioning Uruguay, for example. So Latin America comes off a lot. You and I both know, Doug Casey's kind of Argentine, Uruguay, a few other guys are in around there. Funny enough, despite the chaos of Southern Africa, I think the fact that they border BRICS, that they are a founder member of BRICS, and they're a farming country, and I kind of know my way around. This is my familiarity. I'm sure everyone else who reads headlines who's never been to South Africa will think I'm nutters and they'd never do it. But I just think the value you get, the lifestyle you get, and the people, albeit you're dominated by, you'll always be the white European, which is the downside part of it. And there's the security that goes with that. But there's the Western Cape is just such an attractive place to live. and it won't do the China bad story with the same zeal at all, if at all. It can't. It's roped into that team. And it doesn't matter if it does America bad. I mean, America aren't going to send aircraft carriers to the tip of Africa when they've got enough stress headaches going on.
America's going to have an issue, which is whack-a-mole, right? So there's going to be increasingly numbers of recalcitrants who choose not to be dictated to, and we're seeing this taking place. That's why Sudan is
involved. Yeah.
So the global South will be fought over, and so there are some dominant players within it that where there could be some fireworks. And that's where, if you go to, say, Latin America, one of the reasons that I've got stuff happening in Costa Rica is because it's a know-nothing little country that no one cares about. It's not geographically important. It's small. It's
hardly hated by anyone.
It's hardly hated by anyone. Doesn't even have a military. It's just a little nothing country that's actually safe as well. So it ticks a whole lot of boxes, including abundance of resources in terms of water supply, food. I mean, you literally got to be retarded to starve there. Like the food just falls off the trees. Now, it might not be the kind of diet that you're used to, but
plenty pawpaws.
Plenty pawpaws, avocados.
Great, great. Very healthy food, I'd add. Panama is very much the same. I mean, it's my neighbor. And I'm shocked that Panama...
Yeah, if you went up to Ketane.
Yeah.
It's kind of similar, right?
Yeah.
Yeah. So that's where I'm, in terms of physical locality, that's where I want to be.
Costa Rica, people are saying, is expensive relatively now for land because of the American and the popularity. We know of that and that geography. I still think you want to have a few and you want to keep moving between them and plugging into the kind of communities that are reset communities that are outside of our own, but people that are preparing. And you'll find, and then doing the kind of business deals that you've described. You almost need we need a template contract out of you, Chris, as an idea to go practice on a few farmers. How you pay? Do you pay annually for a certain percentage? You're making equity investments for a certain percentage?
I don't. Yeah. Good question. The relationship dictates what that is, and so you got to look at each one individually and say, okay, what am I looking at? What am I trying to achieve? What is it that this individual that or company that I'm looking at investing into or with, or having some contractual arrangement with, what is it that they most require, right? If you can solve other people's, this is true of the world, and you know it. If you can solve other people's problems, they will help you. They will want to help you, but we need to want to help them. I want these people to succeed. It's in my best interest to do so. And so the best way I can make that happen is the way to make that happen. So sometimes it is equity investments. Other times it's installment payments, which I'm leaning to feeling have somewhat less security for the reasons that you brought up, which is an inflationary scenario where you've got to readjust that particular contract, and or where the whole bloody banking system gets shut down and the internet gets shut down, or something of that description. So now what does that contract look like? Well, you can't administer your side of the deal.
Yeah.
So I do have some of those, but I'm less inclined going forward to use those. And look, it's anything within your own means as well. You know, people saying, "Oh, Costa Rica is expensive." Within relative means, what we're dealing with here is basically it's potentially life-threatening or life-changing. And so if you're a person with any level of means, going and spending $1 million or something in some place like that is fairly inconsequential. You know, I don't care, quite frankly. It solves the problem for me. I need to solve the problem, so I'll solve the problem.
Yeah. No, needs good lawyers, needs good contracts. And then, of course, you get the arbitrage. You can essentially set up contracts for provision of food well beyond your own personal need, that you could become an intermediary to family, friends, neighbors.
You become you, be, you become a solution. You become a
Yeah,
solution because
that other
you
people
can't.
will want to buy.
Yes. Yep. So what I didn't reference is everything that I try and do it at scale, so that I have the ability to feed other people
Absolutely.
and to
Yes.
because it is strong. Like I might get something where I'm like, I need some electrical supplies. I'm like, well, I haven't solved that problem because I didn't think about it, right?
Mhm.
If I've got a broad network of people that I'm helping, within that network, I'll be able to solve that problem.
Yeah. Yeah, it makes absolute sense. And hence why, as I say, South Africa is doing the slow motion collapse that already has a lot of people already be power independent, already be water and borehole independent. And once you have that independence, you're in a good place. I love that as man, as provider, you are a solution, and as well as an investor for others. And that positions you in a very, very strong way, as a localized hub, and that allows you barter trade for other things where you are caught short, or left field things that weren't easily scenario cast. In the
Yep.
macro picture, one of the community members is, what's the next big dominoes to fall? I mean, let's just take a moment to acknowledge what dominoes are really falling that most people are not seeing as significant because we've been numbed, anesthetized into happening it. We are watching a series of American banks starting small and localized, going bust, and being predatory acquired by the too big to fail Fed shareholders, banks, quite possibly, as I've speculated, by shorting them as well. They probably have dealing rooms making money, causing a short on their share price that then trickles through into a confidence crisis that then sees depositors leave the small bank for the very same big bank that is now going to buy them at predatory low prices, a la BlackRock and who I expect to see buying up half the property markets at the next major crisis low. The other half they don't own, that is. So we already seeing a lot already fall. So the question that's being put, what does Chris believe will be the next dominoes to fall? It's quite a heck of a lot that needs to be acknowledged as already in the process of falling right now. But what would the next be for you in lieu of that setup that I've given you?
I think it's evident that they're running out of time. They're running out of time because the bond market is imploding.
Unsustainable.
It's unsustainable. And with it goes pension funds. And with pension funds goes insurance companies. And with insurance companies goes all of the obligations that have been at the fulcrum of, or should I say, the foundation of socialism, right?
Yeah.
The socialist setup that we have in the Western world, one whereby we agree to pay exorbitant taxes for healthcare and for, the nanny state to look after us, right? And then the ability for them to maintain those or abide by those liabilities is, frankly, is long gone. But now it's just they're trying to hold it together, and that brings about the probability, and we're seeing this, that they're going to rush into getting a central bank digital currency implemented as fast as they possibly can.
Doesn't the crash need to happen first? Because they have to go through that old and new, and there has to be a parallel running phase where they leave the obligations they no longer wish to honor into wither on the vine as of the old.
They need to set up the infrastructure, and they need to set up the narrative such that people in their mind go, oh, that's an alternative. And now you might look at it and go, oh, I don't like that alternative. They don't care, because you will like that alternative when
you have nothing else.
Exactly. And so they're running in parallel. I mean, you had Jamie Dimon come out in his note to shareholders just the other day saying that governments and businesses might need to invoke eminent domain in order to push forward with sustainable investments.
Now, explain what you understand to be eminent domain. That means state can seize assets, is it?
Yep. So the way it typically works is, let's say you've got a property, a farm, and they want to build a highway. Like there's a new interstate going through wherever the heck it is.
They
Okay,
can put to force.
they can take that. Now the way that it works currently is that they won't take it off you and give you nothing. They will assess the value and then they'll pay you out for it. Okay.
Yeah.
They get to assess the value. I mean, you could argue it and you can take it to court. Not everyone has the capital to be able to do that, and so on and so forth. But imagine that you did that today. And they could go, well, you got this farm in wherever, and it's worth $10 million, and they pay you out. And you go, okay, cool. Well, I got my 10 million. I can go to somewhere else. What about if they crash the entire system and that farm is now got no bits in it and it's worth $1 million? And they go, but we are pushing forward with, sustainable energy, and we need to put a solar farm in here. And they might not even do it. They're like, no, we'll do it in 10 years' time, whatever. But so now they
need to secure the site. Yeah.
And you secure the site.
Government moves slowly. Exactly. They're starting the legal process. So they could do that. And essentially they crash. They're going to do this.
You've got to ask yourself, why is it that Diamond specifically wrote that? It's a trial balloon. He's putting it out saying, we're going to do this.
Yeah.
Right? And I saw an argument just the other day when I mentioned this, and someone was saying on our own forum, and someone was like, that's fine, we'll just take the capital and we'll go and buy something else. I'm like, you're missing the next part. You're missing the part where they collapse the value of that asset and buy it up for cents on the dollar under eminent domain.
Yes, and you can barely buy a bicycle with the proceeds. I totally see that. So we've got to remember the
all that ties into the central bank digital currency, and it ties into the collapse of that bond market, because they will turn around and blame whatever the next event is, right? And say, as a consequence, all of these obligations that we agreed to, well, we have to reassess these. We have to reimagine them, or whatever the fuck words they come up with, such that they now renegotiate those contracts, and that'll be a taking away. It'll be saying, you're not getting all these things we promised you, but don't worry. It's okay. We've got your back. We're going to make sure that you don't die. We'll give you the crumbs off the table, and we're going to call it UBI. And we'll push you into the system. So that's the next. That's what I see as, maybe it's not the next.
There's a little argument on the pension. Everybody's going to get rinsed on the debt. The debt is a failure, and it's part of the fiat failure. And anyone who has a pension is going to get rinsed, and they get the UBI. The people that have been smart and have secured assets, that's more interesting, because most of our audience is at least thinking of that, and how they rinse those people, including us, is going to be critical. And what your land site and saying it's critical. Can they do that to suburban houses or non-scaled farms globally, till they eventually say everybody has to live in the city centers in AirPod? No one gets to keep a couple of acres, even if it's not scale enough for a farm. We need everybody out. And they do exactly like you say. They do nothing with it, but they say it's preserving nature for climate change. You all need to live on top of each other in your AirPod where we can watch you. How do we fight that? And apart from different countries, what if it's universal? What if
it's, look, that is their goal. That's where they're heading with this. That's what they're trying to achieve. And in fact, there's a whole lot of reports where they've already designated around the world, what they deem to be important, or like it's not a nature reserve, but it's like
uninhabited lands.
And so then it's huge space. So ultimately, that's what they're trying to do. But it comes back to what I said before, which was when discussing the implementation of a technology and the ability to run it and manage it is very, very difficult. Even when you know what you're doing, even when you have some of the best teams in place to do that. And these guys do not have that. So I think it's going to be problematic to be able to implement that digital side of things. The other thing is, when you're talking about this physicality of land and resources and so on and so forth, again, if you look at how dysfunctional some parts of the world really are, there's always workarounds. There's always has been workarounds because people have biases and they have vested interests. So for people like us, where you might have a rule that exists for everyone, we know, you and I know, that there are other rules depending on who you are and what influence you have and what capital you have as to what you can get done. And it's even more true in places like South Africa, Latin America, Southeast Asia, where it's more dysfunctional. So the more dysfunctional a place, the greater probability of freedom is basically one of the ways to look at this right now. So that's where I think this starts falling apart, and where that social control structure is funded by a collapsing system. It's literally funded by something that they're collapsing. They're trying to collapse it in order to gain more control. It's like if I make everybody weaker so that I can hold them all together, somehow I think I've got more, right? But ultimately that system is designed to fail. And the other component behind it is that is a power vacuum. It's literally falling, it's collapsing. And power vacuums always get filled. Yeah. And so what you'll see is
for us, Chris, is that power vacuum is just a change of slave master rather than us assuming that unless you've reached a certain scale or level and sworn to join the right clubs.
But for us, we've always had slave masters in the world. Exactly. Was the Brits. So we're going through a change of slave master. The other component typically that happens is within that time frame of change, there is a lot of before you get a real consolidation of power, whether it was the Brits with the British Empire or the Americans current day, in that transition phase, you basically have a breakup, and there's a lot of the new hegemon has not yet solidified control across the entire domain.
That's a window of opportunity.
That's a window of opportunity. Yep.
And that's why I say actually the harshest Bolshevik revolution, which was designed to attack the middle classes and the farmers and those that were self-reliant. It's quite important that people understand that historically there's precedent. It's going to befall the West. The West hasn't had its generation that's done what Russia's had to go through, what China's even had to go through, and what Africa has on and off gone through in coups and various things. So it's almost, I keep coming to the same things that I counsel, because this all started from the community members' question. What's the next thing to fall? It's the end of the pension system and the introduction of UBI with the debt failure, which is the fiat failure, which is then then they come after the reckless, crazy problem reaction solution. They come after those that are self-reliant in the middle classes, or they force you out, or they do compulsory purchase, etc., etc. So you have to not be in the legal targeted areas, the Commonwealth and Western nations, who are the ones that they most want to take down, who have the highest, fattest, juiciest middle class. You are the beef burger in their patty if you're middle class. And I think actually being one or two relatively,
I'm going to use debt as the leverage.
Yeah, you've got to be. That's a priority number one. Is you can't have someone who spikes interest rates to 25%, meaning that's the end of you. You get sold out at the bottom in a repo situation. Too many people have debt. I'm working on the assumption that everyone listening here knows that they either have already done that or is assuming that it's priority number one. But if you're unleveraged and you're invested in unleveraged corporations and you're wanting to know where to go, don't be in the nation states we've just described. Don't be personally leveraged, and then start signing up the contracts Chris has done, or forming localized community-based supply chains and investments in primary product suppliers, so that you are actually a solution to others who have yet to do that. And that's pretty important. Just going back to the question, in addition to his question, would you ask how to move with precious metals? So say you have multiple locals with precious metals. The one thing they know is that the countries are actually locking down the money, the real money from metals as movement. So you can't just put bars of gold or silver into a car and drive across the border. That would be the easiest. Most people have to fly. How do you get a metal movement, and what do you do? And one of the solutions, can we do, if we have a sufficient prepper or reset community, can we do scans and do metal swaps with other people in other locales that are also suitably independent? In other words, a South African provides a scanned kilogram bar. I go to my Panamanian vaulting guy and produce a scan for my gold bar, and we do a trade. And I can go and claim when I move to South Africa, I can go and get his bar, and he has a vaulting service saying, we hold one here for you, and it's scanned, and come and fetch it anytime you like. He's coming to Panama. That's a bit of an ideal situation, but what's your take on moving with wealth if you are arbitraging and got some movement? Because you move yourself, you're in New Zealand now, but you have other places of interest.
Yeah. I mean, there's a few services that already do that provide a service similar to that, right?
Yeah.
Even not even in crypto, just some vaulting services where you can where they have multiple vaults, and you pay a fee, right, for what is essentially I'm not kind of saying, oh, to buying and selling. Look, ultimately, it's the transportation costs and a number of other things. So those do exist, and you can take advantage of them.
But precious metals transport is cornered by Brinks and what's the other guy, G4X or whatever, and they're all owned and controlled by the same people.
I've chosen not to do that, at least not yet. I'm not suggesting that it's...
The question is more, what if you had to move? Let's say New Zealand loses its head, all in with Australia. They declare war on China because America's declared war on China. They're closer proximity. They're going to be the Pearl Harbor of any Chinese attack. You're under a war situation. You get bombed. Blah 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 blah.
Yeah.
Sydney,
I've just
you've got to get out of there.
I've kind of looked at putting vaulting in a number of locations that I deem to be my best bets. And I acknowledge that I might be in a scenario where I kind of walk away from.
You're not going to keep it all. Basically, you accept you've got to have a lot of eggs.
I can accept that I don't want to, right? But we've got to live with reality. And the reality is that if they choose to lock you down in some particular place and seize assets and all those sorts of things, there's not a lot you can be able to do about it. And the best thing that you can do about it at that point in time is to have an alternative where you can just walk away. Because if you're not going to walk away, you're going to end up getting yourself shot because you're going to be so pissed off and you're going to do something that you probably shouldn't do. So, so that's optionality. I'm building as much optionality as I can possibly get within your means, right? So everyone's got to do what it is within their own means.
Make some big ass gold jewelry. We become very bling in pure gold around your neck, and
like
fake eight around. Yeah, exactly. I'm thinking of that Indian guy who has his like vest in the rolled gold, We can create the church of the great god of yellow, and enshrine some religious connotation to it. I must always have with me the divine precious yellow god of the thunder. Yeah, exactly. So maybe a couple of tricks and the rolls up.
And Francis is you can't take very much.
Yeah,
you can't take much value. Even with big chunky gold chains, you're looking at thousands, maybe tens of thousands.
You're not getting hundreds of thousands easily.
You're not getting hundreds of thousands or millions. You just I was
holding a kilo of pure gold, and I just thought, Jesus, that's a bloody big amount of jewelry you would be forced to make and knock into holes to carry a kilo just of pure gold. And shape this into something really crude and put it around your neck or around your arm. It's massive. It is absolutely massive. And at current prices, you're at 64 grand on that.
Yeah, what's that going to
get? Better than a kick in the backside, but it's not.
Better than nothing, but it's not really going to tick the box, is it? So, so no, I don't think that's ultimately a solution. You've got to know.
Greg, gather your thoughts there. I'm going to throw another ball at you. This question I kind of feel I have an answer to as well, but I'm interested in your opinion. On the pension subject, you have the private and public pensions. Would you assess them differently in terms of the likely, I think he's referring to the outcome. And if yes, what would be the risk difference? And my take is actually, I don't think they'll be viewed particularly differently, but I think both will be smashed into UBI.
Okay, well, to answer the question, consider what pensions invest into.
Debt, both of them. One's a promise.
Both of them. And so, while we could argue that the government is more nefarious and blah, 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 the realities of the business structure of a pension fund are horrible. You wouldn't invest in that, in a business that literally loads itself up to the eyeballs in sovereign and corporate debt, and has done so for the last 10 years at rates that make blood shoot from my eyes. I mean, so
there is equity in some of the private pensions as well. They're not exclusively debt, but that's also not going to do that great either in demand-destroying events. Would you think that, given that it's a Bolshevik control structure that wants to come in, they want to definitely kill off the middle class and more prone to have private pensions? You're going to get almost, if anybody's worse treated, it'll be the private pensions, because that's more likely to be middle class. While your postman or your local nurse, or someone working for the NHS in the UK, for example, I think they're going to get hammered too. But if anybody gets hammered harder, it's going to be the private.
I haven't really thought about it, to be honest, because I have no interest in investing.
Concept, yeah.
Here's the thing. When I think about questions like this, I'm like, every question should have an answer and an outcome that's not just intellectually, interesting. Like, you go, what's the outcome and what are you going to do about it? Is there an action that you can take that makes your life better based on the answer? So if we think about pensions, whether it be private or public, your pensions are doomed.
Yeah.
Okay. To what extent, I don't know, but I don't even want to find out. I'm like, I don't want to be invested into that. I don't want to have exposure to that at all. Zero, none, nada.
Get what you can out.
So that we're talking around issues which basically I don't even allow myself to go there, because I think they're a waste of my time.
Yeah.
I've got limited time in the day, and so I'm going to focus that time on getting a productive, positive outcome. And I cannot get one when I'm looking at a clusterfuck like that. There is no positive outcome. It's varying degrees of bad.
Yeah. And it's a wage earner's mentality. You need to be an entrepreneur at an exceptional time, a reset periods mentality. In other words, you have to go back to Hunter. This notion of someone's going to provide for you was always a ruse. Thinking of pensions in any form of wealth, I think, is the wrong framing. So deep diving on the whole pension thing, it's going to be wrecked. That is all you need to know, and probably both equally badly to an exceedingly low level. And you're going to be offered some shitcoin token, which is issued by government.
Like in some, CBDC.
And to receive it, you're going to have conditions of compliance to show that you are a good pensioner and you've had your flu shot and your everything else that goes with it. So the whole notion and concept of freedom, actually, I would say it's the wrong question.
And they won't even give you a payout. It's going to be a drip-fed system where, in order to get it, you're going to have your carbon footprint tracked and make sure you don't eat too many steaks. And it's
anything that ends up reliance on state, which we all see government is doing, is going to be this prison cell. So let's not ask about whether the prison cell will have a bed and a bedpan. Let's ask how we're not going to be in the prison cell at all. And I think that's my take as well. I have no reliance on any form of pension. You are investing in equities. You are investing in bullets, guns, chickens, boileries, food supply, gold, precious metals, and independence and freedom. And the minute you're relying on state, you have surrendered. That's my take, and I think that's Chris's take as well. What last and final positions, if you were given a mission statement for everybody for the times, how would it sound, Chris, right now?
I have to think about that. I guess it comes back to where we're at in the context of history. And there's that age-old saying that weak men create bad times create strong men create good times, and good times create weak men, and round and round we go. And we have incredibly weak men in the world today, and they are creating very bad times. So,
And evil, I would argue, weak and evil.
oh, they're satanic. I mean, these people are literally satanic. So be a strong man, and that can include females, right? Be a strong person, be a strong individual. Stand up for what's right, stand up for principles, and the time to pussyfoot around, trying to worrying about what people might think of your things that you mention or things that you do, because you take the actions that I've been taking, that you've been taking, and you're going to get huge amount of resistance. And what's interesting is you're not even going to get much resistance from people you just think you're nuts. They just go, you're an idiot. Okay, fine. You're going to get resistance from people close to you, right? Because they see something and they don't want to take that action. They don't have the strength. They don't have the fortitude to do that themselves. They don't want to know. And they will chop your head off for it. So my 1 minute pitch is basically be strong in the face of extraordinarily difficult times. We have extraordinarily difficult times. Understand what they are, grow a spine, and stand up to it. Do whatever you can do and become the solution for the people around you. Become the solution to help people, because they will help you. And you're going to need their help, and they're going to need yours.
I love that. And I think if one of the key pop-outs for me personally was become the solution. That scale, look not at a small level. Don't look, how do I secure some eggs and a chicken breast? Say, how do I on scale secure food for many? Thereby not only doing, sorry, go ahead, Chris.
You make a great point, and I haven't highlighted this, and I'd like to just make this point. If you are the person where you go, okay, I'm going to secure everything for myself, I'm going to gather all my chickens and you've got what you're doing is you're building a prison, right? Because if your neighbors don't have what you have and they are starving, they will fucking come for you, right? You will go from being the self-sufficient guy to the guy who has to protect everything that you've got, right? And you're now, think about what they're doing. They're centralizing, they're concentrating everything. The answer to centralization is decentralization. So the answer to the problems is for you to have a decentralized approach. And that means in your community, it means in your relationships, it means in everything that you're trying to build, which comes back to the solution that I mentioned to you, which is to have these contracts where you can help people and as part of a network, right? That's much better than you hoarding everything, fucking storing it in your house, building a big 6-foot fence around you, putting some armed guards and going, yeah, I'm good. I'm ready for the apocalypse. Bring it on. Like, let's retire it. And you can't live like that. I mean, you can if you wanted to, but ultimately someone's going to take you out. And it's just not a very good way to live. You're not helping anybody else live. Do you really want to be the guy that lives in your gilded cage and everybody else around you is suffering? No. Yeah. You want to go out and so anyway, I'll stop. But that point's important because you actually build resilience there.
Yeah, build resilience and surround yourself by other people doing similar things on scale, where you become the solution. I think that's it. Awesome, Chris. We've had a good amount of your time. I'd like to let you just remind everybody where you are at if people seek to engage, and what the rules of the game for engaging, how to find you, and everything else, and all our YouTube fans that will be watching this later, to smash the like. We love having Chris on. Check him out at his website. Please give that information over to everybody.
Yeah, cool. Okay, our asset management business is glenorchycapital.net.
Let me shout out that spelling, Glen Orkney, Glen. Is it Orkney or Orkney? Sorry, I missed.
GLENORCHY.
CHYORCHY.com. That's how you'll find.
No, capital, glenorchycapital.net.
Glenorchy Capital. Okay, link below. We'll have that straight by the time this goes out. And what will people get with that elevator pitch, 1 minute elevator pitch?
You'll go onto a website. It's just going to give you a little bit of a rundown. It's asset management. So we manage private client money for individuals like ourselves. And we've got 2 portfolios that we run on that. We have a publication business, which those clients get access to, and that's typically actually where most people start. And that's at capitalistexploits.at. Which is where people normally sort of find us.
Which is also your Twitter handle, at Capitalist Exploits.
I think Capitalist EXP is at Capitalist EXP is the Twitter handle. Yep. And so that's where you can find us. And but yeah.
And people, in terms of some of this reset planning, you will help build wealth in how you see equities and making investments with their money. But if they wish to engage further on some of the things we discussed, it's not part of that asset management service. That's something they need to take on themselves. Is that correct?
Yeah, look, it's on the publication side of things. I write a sort of every 10 days, 12 days, I publish an extensive report which covers a number of things, equity markets that we're looking at, sectors, geopolitics, basically whatever I think is interesting at the time. And so we cover a number of those things in that. And then on an individual basis, basically with our private clients, that business began as a family and friends setup where we're just managing family and friends' money. And so we've tried to, we're pretty not restrictive as in we interview every client that comes in.
Yeah.
And
you don't want some glittery oak. Yeah.
And so, we're very focused on what we're doing, and we have a very clear understanding of what problems we are trying to solve. And those either work for clients or they don't. So it's important for us to get a good fit, and it's worked, touch wood, fantastically. We have a brilliant group of clients. And so within that, individually, often clients will have certain problems, and they'll reach out on an individual basis. And quite frankly, that's good for me because it also helps me to build out my own. People tend to look at us as like some guru with all the answers. I'm not a guru with all the answers. I'm just another dude. And I'm good at certain things, and I'm really shit at other things. And one of the biggest values I've got is within that community of people who've become very extremely good friends who are doing various things. And so a large part of that is like networking them, where it's like, oh, this person needs to talk to that person and stuff. So it's ad hoc, but where people have got some of these issues, and we all have them. Like where many of us are all trying to solve the same sort of problems. Those are discussions that we have with clients. So, but it's not something formalized per se. We have like a Q&A for the publication on a monthly basis, and sometimes we'll get questions like that and we'll address them. So, yeah.
Excellent. Chris, thank you. I want to say thank you very much for your time. It's been awesome chatting with you again. Quite a strong prepper segment. Be the solution. Go with your solutions with scale so that you can offer the solution to others as well. Big takeouts. And we ended up talking a lot about securing future supply chain. It seems from you, if we're answering the question, what's the next shoe to drop? We're waiting for admitting that the debt markets are worthless and the pensions are worthless as a result, and the fiat currency is largely worthless. And we get bounced into the UBI. So it's a foreign exchange crisis. I'm expecting, which will probably be masked by some geopolitical events such as wars and or climate lockdowns, stroke pandemic, stroke who knows, other tagged demand destroying events. And you feel that we may be facing a bit of a demand destroying event, if I get it correctly, but long run oil and commodities and all the unloved sectors will come back.
I feel like what they're trying to do is create that demand destruction event so that they can go and pick up various assets and subjugate us.
Yes.
I don't have the ability to know, and you're good at this, like the timing of that and how long it lasts and everything else. So the core of my portfolio, I look out 5 years out and I go, I have to get that right. I cannot get that wrong. How do I do that? And so then I position accordingly, and then I can trade around the edges and stuff. But that, for me, is like I can't. If I screw that up, you get one chance on this thing.
Yeah.
So
of course, on the 5 year. And I am macro and long term too, but I like looking at the charts and I can see that, and I love the good entry. So I think it's a good combination. Thank you so much for your time. Everybody's got those details. We'll also put them up. Have a great week ahead, and I look forward to talking to you more in the future.
Absolutely. It's been fun, as always. Love talking to you.